So let's just take a break and have the conversation that everybody wants us to have. Talk about LLC taxes, how to file as a single member LLC or multi member LLC. Let's get into it. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing superb. I'm doing marvelous if you were to ask me. And if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today's convo will revolve around LLC taxes. An LLC or limited liability corporation is actually a business entity that behaves like a corporation at the state level, but may be taxed like a partnership or sole proprietorship at the federal level. So you have this duality, state and federal. So to create an LLC, you have to apply to your state's Secretary of State. You have to put together an operating agreement. You have to secure some licenses depending on the industry you're in. And the great thing about having an LLC is that you actually can get a lower tax bill. In other words, you can opt to file your taxes as a C corporation or S corporation instead of a sole proprietorship at the federal level. And what does that mean for your particular tax situation? Are LLCs really better from a tax standpoint than all the other business entity types? We're going to talk about it tonight. We're going to talk about it today, actually, in today's show. So if you are considering establishing an LLC for your business, you want to keep these tax considerations in mind. So how your LLC is taxed depends on how many members it has on its roster. Getting taxed like a corporation is possible under an LLC, which may result in lower tax rates overall. And like other business types, LLCs offer some deductions that can further reduce your tax burden. And today's conversation is for a small business owner operating under an LLC who needs additional information about how to file his or her business taxes. All right. So let me give you a few LLC tax guidelines. So the flexibility of the LLC structure means that there are 4 separate tax scenarios that your LLC could fall under. If it's a single member LLC and hasn't opted to file as a corporation, it will file its taxes exactly as a sole proprietor would. If it's a multi-member LLC and hasn't opted to file as a corporation, it will file its taxes exactly like a partnership. If it has opted to file its taxes as a C corporation by submitting IRS Form 8832, then it will file its taxes like a C corporation. And scenario number 4, if it has opted to file its taxes as an S corporation by submitting IRS Form 2553, then the LLC will file its taxes like an S corp. Let me quickly talk about filing taxes as a single member LLC. So in the eyes of the IRS, a single member LLC and a sole proprietor are practically one and the same. No difference here. Remember, an LLC is a state legal formation, not a federal one. So consequently, taxes for single member LLCs are prepared and filed in the same manner, meaning they are added to a personal tax return. The biggest differentiator between, say, a single member LLC and a sole proprietorship is that LLCs shield you from liability in nearly every case. So where major events such as a bankruptcy or a lawsuit against your business have the potential to result in great personal loss, LLCs limits the ability to business assets, saving your personal asset like your home and personal savings. And according to the IRS, the IRS has been very clear about that. The owner of a single-owned LLC must include a Schedule C profit or loss from business with their 1040 or 1040 SR. So a Schedule C, we have covered this on another show at length. It is used to calculate and report a business's income or losses in the previous tax year. So through the Schedule C, your business profit will be calculated by adding all revenue, and subtracting all the cost of goods and services, right? And any other associated business expenses are considered in the calculation as well. So once completed, in the final sum is the business's profit, net profit, which is then added to line 12 of the 1040 form. And that income is included in your personal income and taxed accordingly. So if you run an LLC by yourself, and this is something that I really want to say, if you run an LLC by yourself and haven't opted to file your taxes as a corporation, you will file your taxes as a sole proprietor would by reporting your income and expenses on your personal tax return form 1040. We're showing this to you right now on the screen. You can see here along with the link to the IRS website. So to do this, you'll have to first calculate and report your business's profit or losses using form Schedule C. We're showing this to you also on the screen right now, and you'll have to also report and pay Social Security and Medicare tax, that is your self-employment taxes, using Schedule SE. We're showing this to you on the screen also, along with the link to the IRS. All right. Now, one thing you have to understand is that because the LLC is ignored for tax purposes at the federal level, an LLC is taxed like a sole proprietorship, right? And this is why the IRS uses the word disregarded entity. The entity is only disregarded for tax purposes, and these LLCs still retain all of their limited liability protection. And another thing I want to talk about pretty quickly here is that the disregarded entity thing. It's very important to mention. So single member LLCs are taxed by the IRS as disregarded entities. So this means what? It means the IRS ignores the structure of your business, the fact that it's a single member LLC, and taxes you like it does any individual. So the LLC's income is reported on your personal tax return at the end of the year. Okay, and with your LLC income, you can pay yourself with a distribution. You'll have to pay self-employment taxes on your distribution, but because you already paid income taxes on the LLC's total profits, you do not have to pay income tax on the distribution. All right, and this is very important. Now, the one question people always ask is that if the IRS treats my single member LLC as a disregarded entity, do I still get the benefits of being an LLC? Yes, because again, we have the LLC is a state legal formation, whereas it's not a federal fiscal formation. So even though the IRS ignores the LLC structure when it comes to taxation, you don't have to worry. You still get the benefits of personal asset protection and deduction of business expenses. So to ensure you get these benefits, you should conduct your business in a formal way. All right, it's very important. The LLC has something called the IRS has something called ordinary and necessary business expenses. So you want to run your business as a business, not as a hobby. We're showing right now on the screen. You can see on the screen we have a little snapshot here where it sort of nicely recaps what I've been talking to you about. So a single member LLC, you have to think about Form 1040. We showed this to you before. Form Schedule C for the profit and losses. Very important. Your income sources and your expenses. And then you have Schedule SE. Schedule SE again is SE stands for self-employment. You got to pay taxes. It's simply because you are not whether you are taxed at the federal level as a sole proprietorship or as a C corporation or as an S corporation. Doesn't change anything. You still have to comply with the different tax laws that you have to comply with. And don't forget, folks, very important, don't forget the state taxes. State tax authorities have to be remembered too, if you don't want to have any bad surprise. So this is important. You need to actually cover your back at both the federal level and at the state level. Let's now talk about filing taxes as a multi-member LLC. Now, multi-member LLCs are taxed like partnerships. They could be taxed like partnerships. So if your LLC has more than one member and is taxed like a partnership, the LLC's income will flow through to the members themselves and will be reported on their personal tax returns. Specifically, an LLC that's taxed like a partnership files Form 1065, right? And this is more an informational tax return that reports all of the partnership's income and expenses. So the LLC also issues a Schedule K1 to each LLC member, showing the member's share of the LLC profit. So your LLC's operational agreement should list each member's percentage share of the LLC's profits and losses. And LLC members then report their share of profits or loss on Schedule E of their personal tax returns, right? Members must report and pay tax on their entire share of the profit, even if they leave some of those profits in the business rather than taking them home. And then you have the issue of self-employment taxes and estimated taxes. And to do those, you have to. The members of the LLCs are taxed as sole proprietorships or partnerships are considered to be self-employed for federal tax purposes. Let's say, so when you work for an employer, for example, your employer pays half of your Social Security and Medicare taxes, right? But when you work for yourself, you have to pay both. You have to pay 15.3%. And one thing I want to say here, and we are showing you right now on the screen, Form 1065, along with the link. LLCs are pass-through entities, meaning their profits and losses pass through directly to the owners. And we're also showing you Schedule SE along with the link, and also Schedule K1. Very important. Schedule K1 is important. Now, Schedule K1 is generated along with the Form 1065. And Schedule K1 identifies each partner's allocated profits and losses over the course of the reporting period. And each partner's Schedule K1 becomes part of their personal tax return. And we're showing you right now on the screen, you can see here we have a nice recap. A multi-member LLC is typically taxed as a partnership. And I'm showing you right now here, you can see. So you have multi-member LLC, each member, your business. So you have Form 1040, Schedule E, Schedule SE, Form 1065, Schedule K1, depending on the member's situation. And one thing that's also very important is that, like single member LLCs, each owner in a multi-member LLC can take a distribution from their share of the LLC's profits. All right. And another thing that you need to also remember here is that if you have decided to start a business with other people and file to become an LLC, then you are likely in a multi-member LLC. And this is very important. This distinction is kind of critical because it will have a future tax consequences, not only at the state level, but also at the federal level, at the local level, at the county level. All right. Regardless of how many people are involved in this type of business, the IRS considers them a partnership for tax purposes. I'm talking here about a multi-member LLC. So like their single owner counterparts, multi-member LLCs have their profits and losses reflected directly on the ownership. In other words, each owner pays taxes on their cut. So that division of profits is determined on the LLC's operational agreement, which generally talks about each owner's profit share on the amount of their investment into the business. If you have a multi-member LLC right now, and you don't have an operating agreement, you better go and start and have one now. It is so important, not just for tax purposes, but also, as the name implies, it is an operating agreement. In other words, this agreement governs several aspects of the business, from operations, aka operational agreement, to finances, to distribution of profits and losses, and most importantly, to the dissolution of the business. If something happens, if God forbid something happens and one partner dies or one partner wants to leave the partnership, you want to have clear rules and clear clauses and clear provisions that govern those processes. So going back to taxes here, when getting taxes tabulated and filed for a multi-member LLC, the entity must file the Form 1065 U.S. return of partnership income to the IRS. And this form provides the IRS with the business's profit and loss statements, a list of deductible expenses, and a balance sheet that shows financial information at both ends of the tax year. So once filed, the LLC then provides each member with a Schedule K1 to lay out a partner's share of the company. And this form provides the IRS with an in-depth look at each partner's personal profits and losses generated by the company. So each partner must then file their Schedule K-1 form with their personal tax return. Also included with the member's personal tax return is the Schedule E, which reports their person's share of profits or losses to the IRS. Form 1065 is really an information form. In other words, the partnership, the multi-member LLC, pays no taxes while filing the form. The form is just an FYI form to the IRS because the agency can then reconcile the amount that the company is reporting to the authorities versus what the individual shareholders or the individual members, LLC members, are reporting to authorities. So they just want to double check and cross check the income requirements, the income data, income and expense data. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I'm still having a conversation with you today about filing as a single member LLC or multi-member LLC. And this is within the bigger topic of LLC taxes. Now let's talk about filing taxes as a C corporation. If an LLC thinks it can lower its tax bill by being taxed as a corporation, it can file Form 8832 with the IRS and opt to be taxed as a C corporation. So we're showing you right now on the screen a snapshot of the first page of Form 8832, along with the IRS, along with the link to the IRS website, to the specific page. All right. So getting taxed as a C corporation means that instead of letting the LLC's income and expenses flow through to their personal tax returns, the LLC owners will now get taxed separately from the company, and the LLC will have to file its own separate corporate tax return. And this is known as a Form 1120. So also known as a Form 1120, LLC owners, you will use the corporate tax return to report the corporation's income, gains, losses, deductions, credits, and also to calculate its tax liability. Again, the company's tax liability. So like Schedule C, you will need all of your company's important financial information and statements on hand before filling it out. So we're showing you right now a link to the IRS webpage where as well as a snapshot of a Form 1120. We have actually covered this topic on another show. One thing I want to say here is that if you multi-member LLC or your single member LLC decides to be taxed as a C corporation, remember that there is the concept of double taxation at the corporation level, where you are paying taxes on the company's profits, but also on any distribution, aka dividends, that the company makes to you, the owner. So you have to pay taxes on that dividends also, on that distribution also. So you have this double taxation that you don't have with other forms of other legal structures when it comes to taxes. Let's also talk about filing taxes as an S corporation. So an LLC can also file Form 2553 to elect to be taxed as an S corporation. So we're showing you right now on the screen a snapshot of the Form 2553 and along with the link to the IRS website. Now, S corporation status is a special tax designation granted by the IRS that lets corporations pass their corporate income, credits, and deductions through to their owners, just like in a partnership or sole proprietorship. But hold up, folks, hold up. Why would an LLC already getting taxed as a pass-through entity elect to be taxed as an S corp? Right? This is a good question. Well, it has to do with self-employment tax. Sole proprietorships and partnerships have to pay it on 100% of the business profits, but S corporation owners only pay self-employment taxes on the salary they take from the business. So LLCs filing as S corporations must file 1120S. This is the U.S. income tax return for an S corporation, and the members, LLC members, also receive a Schedule K1 reporting their share of the business's income or losses and use the K1 to complete their own personal tax returns, just like a partner would. So we're showing you right now on the screen Form 1120S. And what is so deciding between a C Corp and S Corp LLCs. So while LLCs have a built-in safety valve against personal liability, they have the option of being taxed as a corporation, right? So designating a business as an S Corp or C Corp can change how the taxes are handled and how the owners are taxed, among other things. And filing business taxes as a corporation also has the added benefits of potentially reducing your business tax bill. So in C Corp, in order to file the C Corp, an LLC can file from 8832. I already talked about that. And one thing you also need to make sure that to be considered a C Corp, a business must hold an annual meeting for the shareholders and board directors, issue shares to investors, establish a board of directors, assign positions like shareholders, directors, officers, and employees. So once designated as a C Corp, the LLC files its corporate tax return yearly using Form 1120. So rather than getting taxed individually based on the company's gains and losses, each owner instead is taxed separately from the company. Filing as an S Corp is unique because an LLC, even a C Corp, can file their taxes as an S Corp. To qualify as an S Corp, the IRS requires that a business be a domestic corporation, have only allowable shareholders, so shareholders may comprise individuals, certain trusts, and estates. They may not be partnerships, corporations, or non-resident alien shareholders. The company must have no more than 100 shareholders and have only one class of stock, and not be an ineligible corporation. Certain financial institutions, insurance companies, and domestic international sales corporations are ineligible. This is very important. So what I'm trying to say here is that the LLCs fall under different specifications, resulting in different tax requirements. When we talk about LLC taxes, we need to talk about estimated tax and the self-employment tax. This is a very, very, very pivotal concept. For most LLC owners, their federal taxes will be done as if they were self-employed. As a result, each owner will not be subjected to tax withholding, meaning they must estimate their taxes for the year by completing the IRS 1040-ES, the Form 1040-ES. So corporations can also be required to estimate their taxes and must do so with Form 1120-W. In both cases, you must calculate corporate quarterly tax payments and pay them by the IRS deadline. So if your state also has an income tax, the process is also likely at that level as well. So you need to have a process at that level as well. According to the IRS, individuals must use the 1040-ES form and make estimated payments if both of the following statements are true. Number one, you anticipate owing at least $1,000 in taxes after subtracting your withholding and refundable credits. And number two, you expect your withholding and refundable credits to be less than the smaller of 90% of the taxes to be shown on your upcoming tax return, or 100% of the taxes shown on your tax return from the previous year if that return covers all 12 previous months. Very important. So to use Form 1120-W, the IRS requires that corporations must meet the following criteria. So corporations must generally make estimated tax payments if they expect their estimated taxes to be $500 or more. S corporation must make estimated tax payment for certain cases. S corporation should see the instruction. If you need more info, you want to look at the instructions on 11S. And tax exempt corporations, tax exempt trust, and domestic private foundations must make estimated tax payments for certain cases. And the last scenario, the last criterion here is that these entities should refer to the instructions for their tax return to figure out the amount of their estimated tax payments. One thing that's very important to understand here is that in addition to estimated taxes, LLC members must consider the self-employment tax. And based on Social Security tax and Medicare tax, this tax is calculated through Schedule SE and is like payroll tax, the 15.3%. as of the year of this show, as of 2021. So it is split between the employer and the employee. But for an LLC member who is not paying who is not having his income withheld throughout the year, he or she must pay the 15.3% for Medicare and Social Security. All right. So the key takeaway here is that all LLC members must make quarterly tax payments, and they must also pay the self-employment tax. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still having a conversation about LLC taxes. And one thing I want to tell you is that you need to keep in mind certain deductions when it comes to your LLC, because as you're preparing for your taxes, you should always be looking for applicable deductions to ease your tax burden, right? Now, according to the IRS, some general credits and deductions are available to all types of businesses, including things like your regular business expenses, but also some credits such as the manufacturer's energy efficient appliance credit and plug-in electric drive vehicle credit, among other things. Now, that being said, tax deductions specifically tailored to LLCs also exist. Let me give you an example. If your LLC makes a charitable donation, it can deduct up to 10% of the contribution. And in general, how your LLC gets its deductions depends largely on the type of business structure it's taken on. So single member LLCs can take many of the same deductions that sole proprietors can, like health insurance for yourself, for example, right? Your spouse and any dependents in your home, ordinary and necessary business operating expenses like equipment, home office equipment like rent and utilities, and vehicle-based cost, mileage, and fuel. Conversely, any partnership-based LLC can take deductions based on those found in Form 1065. The cool thing here is that following the passage of the Tax Cuts and Jobs Act of 2017, the federal government also made it so wonderfully that like if you are a qualifying a small business owner, you can utilize something called the QBI. So this is a new pass-through tax deduction of up to 20% of net business income earned. And this deduction will run until 2025 and is considered an additional personal deduction if you meet certain criteria. All right. And one thing I also want to say is that the bottom line here is, if you have employees and make less than $315,000 if married and filing jointly, or $157,700 if single, then you may qualify. Furthermore, this deduction, the QBI I was just talking to you about, is capped at a percentage of employee wages or the property cost associated with the business. So if your business makes more than $415,000 a year if married and filing jointly, or $207,500 if single, then your business is not eligible for this pass-through tax deduction. So let's quickly just have an overview of LLC tax benefits. So generally speaking, LLCs gives you maximum tax flexibility. And an LLC is better for taxes if you are currently subject to double taxation, you're paying lots in self-employment tax, you need liability protection, you are focused on growth, so those are important elements. Then you are going to reap tax benefits at the LLC level, especially the liability protection, because like C Corp and S Corp, LLCs give their owners limited liability. That means that if the LLC ever goes under or gets sued, your personal assets are off limits. And if you're a new and growing business and intend to reinvest most of your profits back into the business, electing to be taxed as a C corporation could lower your tax bill, because C corporations pay tax at a rate that is often lower than individual tax rates. So let me give you a quick roundup of LLC taxes. So you have the federal LLC taxes. So regardless of which tax designation you elect for your LLC, you still have to file with the IRS. So all owners will have to fill out Form 1040, which is your individual income tax return, and its appropriate schedules. So we have Schedule C. So this is the form for reporting income specifically from your business. Schedule SE, the form for filing and paying your self-employment taxes. Schedule E, the form for reporting any income from rental properties and other investments. And multi-member LLCs and special entities will need to file more than that. Partnerships, in addition to Form 1040, must also file the following: Form 1065 and Schedule K1. And don't forget, you want to have the state LLC taxes also, because LLCs are typically pass-through entities. They do not have to pay separate state taxes. That is, the individual members pay state taxes, not the LLC itself. Here are some of the common forms of state tax: franchise tax, sales and use tax. So if you sell physical products, consumers pay this tax to you, and you pay this tax to your respective state or local governments. You also have gross receipt tax. So while similar to a sales tax, a gross receipt tax is paid by the seller rather than by the buyer. You have withholding tax. So this is income tax. This is income that is withheld from employee paychecks and paid to the government. And you have unemployment insurance tax. So UI is usually used for unemployment benefits, and tax rates are set by state law. And let me give you other key LLC tax considerations that you need to think about. You have LLC business expenses. So as a business, whether you are a single member LLC or a multi-member LLC, you are able to deduct certain expenses from your taxes. And the IRS says that a deductible business expense must be both ordinary and necessary. In other words, your business can write off any expenses that help your business succeed. And tax deductible expenses can include a variety of purchases. Let me give you a few common examples. You have office supplies, rent and general maintenance, licenses and permits, advertising, insurance. Some expenses such as travel and entertainment related purchases are harder to deduct because these categories have spending limits, additional terms, or must be capitalized. Of course, expenses are only deductible if they are appropriate, right? So let me give you an example. If you think a rooftop jacuzzi is important for maintaining your business, but if the IRS probably will not agree with you, then you can't deduct that. All right. And also, let's also talk about LLC bookkeeping and accounting. It's important to make sure your books are in order to protect your corporate veil, the so-called corporate veil that the IRS pays attention to make sure that your business is not a hobby, that your business is indeed a business. So you want to separate your personal matters from your business expenses as much as possible. And you can actually do this by opening a separate business bank account, by obtaining a business credit card for work-related purchases, right? You can also do this. You can also protect your corporate veil by creating a solid bookkeeping system. Because, and this can be, you can outsource the whole thing. You can outsource the whole operation, or you can have a software such as QuickBooks. Okay, if you have a high quality accounting program, you'll be able to keep track of your expenses and make the process simple and relatively pain-free. And if this is too much, you can even hire an accountant. So it really depends on you. All right, folks, this was it for today. I really appreciate your attention. Just want to quickly recap to this conversation. I was explaining to you LLC taxes, and I was sort of explaining to you how to file as a single member LLC or multi-member LLC. So I spoke about LLC tax guidelines, filing taxes as a single member LLC, filing taxes as a multi-member LLC, filing taxes as a C corporation, filing taxes as an S corporation. The overview, I gave you an overview of LLC tax benefits, and I gave you a roundup of LLC taxes in general. and other key LLC tax considerations you need to think about as you mull over the structure of your business. All right, thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.